fintech, we have very amazing, I would say, broad range of panelists over here. I mean, Ayman is solving a massive issue when it comes to lending. Ahmed is basically solving the problem of digital Roscas. And then, of course, Anna is from Wise, who's basically solving a major problem when it comes to cross-border transactions as well, which has been a major concern. Now, we will just jump quickly right into the main topic. So, Ayman, I would want to start with you, right? So, when we are basically talking about financial, services over here in this part of the world, especially in Egypt, how do you see, first of all, I want you to differentiate the main concept between a neobank and a traditional bank, right? One. Two, because we would want the audience to understand this, right? And two is going to be when we're talking about the state of neobanking and digital banking in this part of the region, where do we stand, especially in specific to Egypt?
Yeah, it's a big start. So first, thank you for hosting us, and happy to be talking to everyone here in the room. So I'm happy you asked this question in the beginning because the headline was more into neobanking, and I was a bit concerned about talking about neobanking for the audience, while in Egypt we don't have something called a neobank yet. So we need to maybe go one step or two steps down and see how the progression of this business or this sector is going. So talking about neobanks or digital banks, let's call it digital banks easier, which are banks that doesn't actually depend on the retail branches and can execute faster. They have alternative data points where basically banks basically take deposits and they lend on the other side. So the way they are used to do the lending is usually based on what they get from deposits. We were just talking about this topic. So it's okay.
The chopper here.
Yeah, it looks like a background. So basically, the way neobanks try to work is basically use alternative data points about their consumers, regardless of the use case. So there are many use cases that came in different markets. Each market has its own characteristics, and accordingly, those markets are the ones that create the alternative data points that basically allows people to get more credit. Traditional banks are basically using the deposits they are getting from customers and the usage on their own products to be able to do the lending. That's my way of thinking between the difference in terms of the value proposition itself. If we're talking about the execution, then there would be a multiple differentiation. So the fast execution, how it works, and so on.
So you talked about like traditional banking and of course them being transitioning towards the current becoming a lot more relevant, right? So Ahmed, coming to you, but before I come to you, right? So by the way, Ahmed, I don't know if many of you know about this. They just raised their Series B of $31 million. So congratulations for that. Star of the day. So how the transition being, right? So how do you see this transition between the traditional banking and of course you're solving a major problem of breaking one specific segment of digital Roscas? First is that you talk about the side of how this transition is happening over here, how this has accelerated the banks to move towards it. And second, if possible, please just break down Roscas for everyone.
Sure. Hi, everyone. So basically, we are digitizing a very ancient model known as Roscas. We call it here as a Jam'iyya. So it's rotating savings and credit associations. And in most of the emerging markets, I think the traditional banking system actually has a lot of flaws and a lot of pain points. And I think the evolution of traditional banking is going towards digital banking probably eventually. But I think we're one step behind that. And that's what we came to realize is that there's over 60% of the population that are unbanked. And those people are not really looking for a digital bank to onboard them, to be honest. So what they're looking for is something that is accessible, affordable, something social, culturally favorable. And this is where I guess the transition should happen, is like trying to take an existing cultural model of which people have actually resorted to solve their, the pain points they see in traditional banking. And then once this has been like fully digitized and, became like quite common, I think this is where, the opportunity of transitioning into digital banking might actually make sense for emerging markets, or specifically for a country like Egypt with over 60% of its population being unbanked.
So while we talk about the emergence of digital banks, now the concern that we might have seen globally, people talking about tech companies not being profitable, especially neobanks, right? Anna, coming to you, operating out from UK, or headquartered out of UK and operating in 50 countries, I believe, all over the world. So how do you see this profitability coming into play when it comes to neobanks, and where do we stand in this space?
Yeah, thanks for that. So the core of it is we really listen to our customers and we solve real problems for customers. So when we first started off the company, when we launched our services in 2011, we started off by going out to people and asking, what are the problems that you're facing? And then when we did that, we found out that people, when they're sending money, they're getting hit with hidden markups in the exchange rate and then outrageously high fees. And then they're paying all of this, but for really, really slow transfers. So we took all that and we decided to go fix it. And then after that, we kept listening to our customers, and then some of our customers said that they wanted to be able to receive their money, hold their money, spend their money, and we incorporated all of that. And then we went and spoke to more customers, and it turns out that businesses want this type of service as well. And so that's why we developed this for businesses, which is now currently Wise Business, which is all the characteristics that the Wise account has, plus some additional features for businesses. So I think the core of it is just really speaking to your customers and solving real problems for them. And then a few years ago, we decided, okay, every single transfer, it needs to pay for itself. So whatever the cost is, we add a small margin, and then the small margin that we make, we reinvest it into our company to improve our services. So by doing this, this is how we remain profitable. And so over the last 5 years, we've remained profitable, and we're doing this while still charging a fraction of the cost that banks charge for cross-border money transfers.
So when you talk about like becoming profitable and adding, of course, a bit of a margin, which is, of course, every business needs to do that. I think one important angle is partnerships, right? So that is a very key ingredient for any, fast growth company. So Ayman, I mean, how do you think partnerships play, number one, how has partnerships played a key role for you? Because if you look into the history of how Lucky has progressed to where it is today, it is, I would say, a combination of multiple partnerships. So how partnerships play a role, one, and how you have capitalized on the aspect of partnerships to achieve where you are right now?
Yeah, so basically, I think in the fintech space, you won't be able to operate without the right partnerships in place, starting from the infrastructure, where basically you need to work with the schemes, the likes of Visa, MasterCard, and the local schemes. You need to be working closely with the regulators. You need to be working closely with an issuer banks. In Egypt, we've been granted one of the licenses related to the first steps towards a digital bank in Egypt. And that requires basically working very closely with the regulator and other issuer banks. In Lucky, we've been basically, looks lucky. So basically starting early on as a marketplace for savings. And by savings, we're talking here about discounts and cashbacks. This is how the business started. When we're talking about the difference between traditional banks and digital banks, it comes from the data, how you're going to build this business based on different data models. And the way we've chosen to go towards this is basically offer something to the people and help the people in such economic situation. We started back after the first devaluation in Egypt, and that was through a marketplace that gives discounts and cashbacks. And this marketplace required actually to build a large network of merchants, which is full of partnerships. What I'm going to offer to those merchants, what are those merchants are going to give back, whether to the company or to the people. And the way it works basically was that we push more traffic through Lucky Financial and basically get more take rates from those partners where we can give back to the consumers. That was the first fundamental, I would say, infrastructure that we're calling it right now more of the promise to our users. Then while you move on towards the financial services and start doing lending, you need still to give more to the consumer. So partnership is fundamental and it's core actually in our business until you reach a point that you can basically position yourself as doing many of the what the traditional banks does. Until then, it's all about how you do the partnerships and how to make it work with your consumers.
So making it work for the consumers, right? Ahmed, I would like to basically ask you on the consumer behavior, on the behavioral changes that you might have seen. I think it would be great for the audience to understand what trends you have seen in Egypt when it comes to savings, when it comes to the consumer behavior on payments. What have you seen so far?
So I think, I mean, in Egypt, fintech in itself is more of a trend now. So I think what we have seen when it comes to customer behavior, and this is actually something in our core, values, is that, understanding user behavior, because again, we're trying to digitize a model that has been there for quite some time, for like hundreds of years, and it's completely based on trust. And so we had to change this mindset and convince people to actually not only borrow from us, but also save. And saving needs a lot of like credibility. Yeah. So when it comes to like fintechs trying to build credibility, you try to build up or create your own trend in a way. So I think when it comes to like technological trends, if that's what you mean, so I think there has been a lot of very interesting trends, like government initiatives like eKYC, so RegTech, mainly just to, I mean, this is really the core or the architecture or the infrastructure itself, and there has been a lot of investments when it comes to core banking. Yeah.
But what about the consumer? So how has the consumer adopted to these? I mean, how have you seen is the uptake ratio high for people using technology or your platforms to start saving?
I think definitely. So I think again there has been a lot of new fintech trends, new fintech solutions, and it's not just a one company responsibility, because I mean there's a few different value propositions and services. This is how we educate the market to actually start adopting such financial solutions and expect to get them digitally. Yeah. So I think this wasn't like only us or lucky, it was actually the whole ecosystem and the fintech ecosystem driving people's behavior and expectations towards digital adoption versus just the manual stuff.
So fintech being a key catalyst of educating the consumer on basically start utilizing and leveraging technology to save more efficiently.
Exactly.
Yeah.
Exactly.
Now, this brings us to the point, Anna, on the infrastructure, how important it is, right? So you have been investing into, be it Wise or, into the ecosystem companies as well. How important it is for any business in the financial services space or in fintech to basically invest into the relevant and the right infrastructure?
Yeah, I mean, I think it depends on the player, right? Like, I think for some players, it does make sense to get your infrastructure from outside. So, that's why, you have fintechs that do banking as a service, for example. Like, there's a real demand for that. But I think in the case of Wise, we decided to build our own infrastructure. And so we started off with cross-border money transfers. And typically, traditionally, when you send money overseas, it goes through several intermediary banks between the time that the money leaves your own account and then it gets to the recipient. In our case, we have a whole host of bank accounts and licenses that are all over the world. And essentially, to conclude one transaction, we do 2 domestic transfers to conclude one transaction. And so by doing this, we're cutting out the middleman and we're cutting out all these intermediary banks, which means that our transfers are faster and they're a lot cheaper. And so for us, it's really important that we continue investing in this infrastructure. And so what I mean by that is that wherever possible, we really want to be connected directly to the payment schemes. So today, we're connected to the faster payment systems in the UK. We're also connected in Singapore and in Hungary, hopefully soon Australia as well. And so keep continuing to invest in this is really important for us, because if we don't do this, then we're always limited with the partner that we work with, and essentially the partner that we work with becomes a gatekeeper of innovation. And so, you know, as a matter of fact, currently about 50% of our transfers globally settle under 20 seconds. But if we had more direct access in more regions, actually this ratio would be a lot higher today.
I just have a question moving forward on this. Like, I just need your 3 points. While you look into the region, what are those 3 points that you feel really excite you the most as Wise?
I mean, one thing I think that's undeniable is the growth, right?
Okay.
The growth, the potential. I think also the regulatory frameworks are starting to form. So that's also very exciting to see because, you know, we do work closely with regulators, and, you know, that's how we establish a good business here. So yeah, I think that's very exciting to see.
Ahmed, your key takeaways that you feel, I mean, hopefully, you know, I can follow up with you in the next 12 months after that. So what are your key 3 takeaways that you see in the region that really excite you the most in your space?
I think, I mean, you've highlighted customer adoption, and I think this is something that we can like closely keep track of. And I think eventually, with the same pace of growth, I think all of us can actually benefit, and not just, by the way, on fintech, you know, trends, but digital trends generally is actually something that would help us all, launch new services into the market, I guess.
So basically, customer adoption, new services are the key enablers for you.
Yeah.
Ayman, yourself.
Yeah, it's okay. So I would always start like what we have started a long time ago, whether from the first business we started in Egypt or basically lucky 3 years back. It's always stay focused with the consumer. What's happening around. So the business started and reached what it is right now because basically we started in a timing of unfortunate financial, not a fortunate financial situation for the country. We're facing the same issue a little bit with the devaluation in Egypt right now. So basically the movement needs to be aligned with what's going around. So giving back to the people in a way or another, whether in terms of savings products, whether in terms of facilitating lending with reasonable pricing, I think that's one takeaway, which is keep focus with the consumers. I think expanding your services regionally needs to be studied very well and needs to move on aligned with your strategy and what's going on in other markets as well. The product innovation and how to move faster on the digital front, I think it's becoming key in this era. And actually, the good thing that our region is picking up big time on that front.
So thank you so much for that. Now, do we have time for questions? We can take 2 questions. Do we have any questions here? There is one question there. There you go.
So here we've got Adam from Mississauga, Canada.
And the best part is he's certainly a trailblazer because he's been showing great interest in the space. So kudos to you for that.
Thank you. You know him too?
Yeah, I met him for breakfast. He had amazing questions. Yes. Yes.
So my question is, what is the type of relationship between fintech companies and banks? Do fintech leaders such as yourselves view banks as a means for success, an opportunity in the future, forming like agreements and bringing mutual benefits, and vice versa, being from the point of view of a bank?
Yeah, that question was one of the questions on the list. So very good question. So basically, banks in different regions they operate on phases. So since fintech in Egypt in specific, it's still in the rise and still in the early stages. So basically, banks are trying to more support the fintechs in many of their operational process. Usually that fades out by time. So whenever the fintechs gets more developed and they move on, the bank starts to sit down or lay down a little bit and become more of what we call infrastructure as a service. So they become more of availing their tools and supporting fintechs as if it's a relationship between a distributor and a reseller, for example. So you're still selling services on behalf of the bank. However, the bank starts laying down and supporting more your infrastructure. You're more lighter, you're more flexible, you move faster. So basically, they should put you in the front, and this is usually how it works. Thank you.
Hi. So this question is mainly to Ayman and Anne. Like, I know, like, those tech companies might be having some sort of ability for people to evade, like, for example, sanctions, or it can be used, misused for any typologies for money laundering, terrorist financing. The question is, how are you developing the technology to mitigate such risk? Because I know that this might be a very big constraint with the regulators, and it's always a deal breaker to either have this company growing or stopped.
Yeah, so for all of the countries that Wise operates in, we actually do have to get a license, an operating license from the relevant financial regulator. So in this case, this means that we're always following the local regulations, and that includes AML and sanctions regulations. So what that means for us to have a license is that, you know, the regulator has assessed our controls and concluded that this is sufficient and up to the standards that's expected in that country. So there's that part. And then, you know, like, we're always developing new ways to catch new trends of financial crime. And so, you know, we have a lot of internal, you know, AML engines and financial crime control engines that run to keep Wise running.
That's for Wise. For Egypt, that's a different story. So, or for our region. So, we're still in the educational phase. So just for the audience to understand that the runway that in the past 2 to 3 years that happened from the Central Bank of Egypt is the first of its kind, maybe in the region itself for Middle East and Africa, issuing those licenses to companies that are starting and building this and investing in this space. It's still very new. So we take more time towards progressing that fast that I want to go to this market, then you get the license and an SLA that, you know, it's a 2 to 3 months. You still have an educational phase altogether. We understand and we learn more about the regulations. The regulators themselves, they need to understand how the business operates, which is still new for them as well. So it takes more time basically in our space.